Wall Street returned to 2008 highs led by a rally in financial shares. Stocks logged a gain on the first day of the month of March, but still finished off their best levels. Few minutes before the markets closed, an Iranian media report on an explosion on an unknown Saudi oil pipeline propelled crude prices to over $110 to a barrel, while pushing stocks briefly into negative territory as well. In fact, the Saudi industry sources later denied the report, but stocks were higher for most of the session, buoyed by a strong weekly jobless claims report, even as weaker than expected manufacturing news failed to dampen sentiment. So good going for the U.S. markets overnight. And to add to that, Fed Chairman Bernanke, in a question and answer session with senators, said that high energy costs and housing could derail the fragile economic recovery.
Housing, I think, remains a very difficult area. We're hoping for price stabilization. We think once the people have gotten a sense that the housing markets have stabilized, they'll be much more willing to buy, and that firms and the banks will be more willing to lend. But right now, there's still uncertainty about where the housing market is going, which I think is troubling. To some extent, a little bit of the movement in commodity prices is essentially inevitable, because if the economy is growing and the world economy is growing, the demand for commodities goes up, and that's going to create some tendency towards higher commodity prices. But when you have shocks to commodity prices arising from geopolitical events and the like, those are unambiguously negative and are bad for both households and for the broader economy.